We have to talk about all of the recent IPOs because the IPO market has turned rather gloomy. Peloton debuted yesterday and it ended its first day of trading down 11%. That might have contributed to the talent agency Endeavor calling off its IPO for the second time. Of course, this week we also saw that WeWork delayed its IPO and it is implementing major changes, including Adam Newman stepping down as CEO. He will remain chairman of the board of that company. Here to talk about all the recent IPO news, most of it bad. Live from Austin, Texas is our friend John Meyer of Starship Capital. John, thanks for coming on.
Great to be here.
So let's start with Peloton. A lot of people are excited about that company. Now look, it's just day one, and the argument a lot of people make is it doesn't really matter what happens on day one. It could get better over the next few weeks. But it's interesting. You have to wonder how much of the tough, rocky debut for Peloton is influenced by the other negative progression of companies like Uber, Lyft, and then, of course, WeWork delaying.
Well, there definitely is some similarity here in that much of the market has been spooked by just the last really 6 to 9 months of disappointment after disappointment, from the Uber and Lyft IPOs in the spring to now these huge concerns with WeWork. And I think there is a lot of this that is still separate. So WeWork, I still am segmenting much of their issues to just an extreme overvaluation that really is just a SoftBank problem. But then with Peloton, there's about some of this that's due to the market, and then and the other half is really due to Peloton itself. Peloton, it's another unprofitable company, and it's a company that sells extremely expensive products. And so my take is that investors are a bit weary of investing in a company right now that has such an uphill battle to sell their $2,000 stationary bike and $4,000 treadmill. And the other thing is, Peloton is a company that doesn't yet have a robust retail exposure. And so without that, it's very difficult to sell these things unless there are stores everywhere where people can try them. And that's why one of my views is that Peloton would be much better off selling to a company such as Apple, where they're another luxury brand that has retail stores everywhere and can really do a good job at getting people to actually try these and then buy them on the spot.
So, John, you don't completely buy the argument that Peloton makes that it is an apparel company, a design company, a hardware company, a media company, a membership service. We had someone on the show yesterday who was more of a Peloton bull who said, yeah, look, the sky's the limit for what this brand can do and how it can branch out its offerings. It sounds like you're a little more tempered, which I appreciate.
Yeah, I've always been bearish towards Peloton. I mean, I think I was on the show in the last few weeks, and to be honest, really sort of saw this coming. And my biggest concern, again, is just the sheer prices of their products. And what I also want to avoid is getting duped by this idea that Peloton has extremely high retention rates for the membership. The reason why they have such high retention rates is because unless you pay the membership every month, your $2,000 bicycle is literally useless. So that's why the retention for the membership is so great. And so what really is the most important metric to watch is just, how Peloton can keep selling these very expensive hardware devices. They're a hardware company at heart. They can't get anywhere unless they're going to be driving sales of the hardware.
All right, John, so I'm going to play the other side a little bit and say, well, to Peloton's credit, they have been a little bit more transparent with their financials, unlike Uber and Lyft, for instance. And in terms of when they came to the public market, the company arguably isn't as mature as the likes of Uber and Lyft, and therefore the investors can really get in on the high growth part of the company and their growth prospects here on out. So to that point, though, would you say that maybe perhaps the IPOs that are hitting the market right now are just coming too late into the game and they should be offering up shares to retail investors sooner?
Yeah, I think there is some truth to that, but I think an even larger force right now to the disappointing decline in price with Peloton is actually due to the fact that there's other even more higher level market conditions affecting this. I mean, we've got the trade war and we've got these daily worries that we might be entering a recession. And so that's when you got to look at what IPOs are more recession-proof than others. I would argue that Peloton is extremely unrecession-proof. Again, when you're selling these expensive devices, the first thing people are going to stop buying if we hit a recession are these luxury high-end devices. And so I think that's another key attribute that's going into the investor decision making here, at this point.
All right, John Meyer with the Peloton take. Appreciate it. We'll have to have you back on soon because these unicorn IPOs are not going to stop, and we'll see if they look up anytime soon. Thanks, John.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.